We're joined now by New York Post reporter Lydia Moynihan. Good morning to you. Thanks for being with us.
Great to be here. Thanks, Adrienne.
You know, this story involving Elon Musk and Twitter sounds like a sinister comic book plot, in terms of a potential hostile takeover and a poison pill. What's the pill for all of our viewers watching?
It's a great question. We're hearing these terms thrown around a lot. So just for some context, it's been a wild week for Twitter and Elon Musk. Last week, he offered to take the company private at $43 billion. That turns out to $54.20 a share. Typical Elon Musk reference. He's sort of an iconoclast reference to marijuana. And that's a 38% premium on where Twitter shares were trading April 1st. So it's a great deal for any shareholder. It's an all-cash deal. And the board decided that they did not want Elon Musk to gain control of the company and take it private. So they adopted what's known as a shareholders' rights plan, or a poison pill. And that means that it basically renders Elon Musk's bid and attempted acquisition impossible, because it would allow existing shareholders to buy more shares, wherein diluting his shares and making it impossible for him to get a larger stake.
But shareholders would buy those shares at a discount, which is the incentive to the poison pill. But are shareholders typically wanting to do something like that, especially when they know this big cash offer is looming in the near future?
It's a great point. And this is what's gotten so many people riled up, is that this $43 billion cash deal, again, this is a huge premium on where Twitter shares have been trading. That is the best deal for investors right now, without a doubt. It's the only deal that's on the table. It's all cash. And people are up in arms because the only duty of the board is a fiduciary duty. And that means they need to have the economic best interest of shareholders in mind. So that means that if they were trying to sell a used car, and let's say Joe came to them and he said, I only have $500, but I'm going to take great care of the car. And then somebody named Elon comes and says, I might burn the car to the ground, but here's $50,000. They would have a fiduciary obligation to accept the better deal. And that's what Musk is offering here.
So what would Musk do next? If we look at history, he offers this cash deal. Twitter's on the defense. So what can Musk do to combat the defense of the poison pill?
It really is like a war. It's like, what is the other side going to do next? So look, the poison pill is extremely effective in preventing a hostile takeover or a bid from somebody that the board deems as a potentially dangerous owner of the company. So Musk, of course, has taken to Twitter since then. On Saturday, he tweeted that the board really doesn't own that many shares in Twitter now that the CEO or former CEO Jack Dorsey is leaving. And so I think he's going to probably stick his Twitter followers on the board. He made the point that the board doesn't seem to be economically aligned with the best interest of shareholders here. So I'm sure that he will continue to rally those folks. And he's threatened, of course, that if he doesn't get this bid, he'll sell all his Twitter shares. That could further take the price. But at this point, if the board continues and it looks like they have adopted this plan, which will be in effect for at least a year, he really can't make the bid. He can't take it private.
So he can't force them to take his money, is what you're saying?
No. But I think he could find a lot of other people who'd be happy to take $43 billion off his hands.
Especially in an inflationary economy.
Thank you so much for watching. Make sure to click on the red subscribe button below so you can get more of NewsNation's fact-driven, unbiased coverage.